The following content has been generated with artificial intelligence under minimal human supervision. The data presented may contain errors or inaccuracies. The opinions expressed in this content do not necessarily reflect the vision, position, or values of Digi-all. We recommend verifying critical information with additional sources before making decisions based on this content.
Welcome to Digi-all Tech News. Today is Friday, February 13th, 2026. I'm Kylie Brooks, and this is where technology becomes clear and engaging. AI is no longer just lifting the stock market. It's starting to sink entire sectors, from software to insurance. Russia has fully blocked WhatsApp and is pushing its own state-backed messenger called Max. Taiwan just raised its economic growth forecast to nearly 8%. All thanks to AI chip demand. Asia-Pacific markets opened lower today after Wall Street logged a third straight day of AI-driven losses. And Capgemini CEO is pushing back on calls for full European tech autonomy, saying total digital sovereignty is simply unrealistic. Let's start with the big picture on Wall Street. For a while now, AI has been this rising tide that lifts all boats, right? Tech companies building data centers, chip makers, cloud providers, everyone was winning. But the mood is shifting. Yesterday, Reuters reported that AI is now creating clear winners and losers. Software stocks have dropped 15% since the end of January, and a big part of that was triggered by Anthropic launching their Claude Cowork plugins. Brokerages like LPL Financial and Charles Schwab fell over 7% after Altruist rolled out AI-powered tax features. Even insurance brokers took a hit after Insurify's new AI tool. And the megacaps aren't safe either. Microsoft is down 16%, Amazon down 11%, both under pressure from massive AI spending that investors aren't sure will pay off. JP Morgan is actually telling people this could be a buying opportunity for AI-resilient companies, but the volatility is real. Stocks that miss earnings are now dropping an average of 10.6%, almost double what we saw last year. Now let's talk about what's happening in Russia, because this is significant. Yesterday, the Kremlin confirmed a full block on WhatsApp. Kremlin spokesman Dmitry Peskov said it was because Meta refuses to comply with Russian law. And in the same breath, they're promoting Max, a state-backed messenger that integrates with government services. Critics are calling it a surveillance tool, though officials deny that. WhatsApp has over 100 million users in Russia, and the company pushed back, saying isolating those people from private, secure communication is, and I quote, a backward step. People in Moscow are divided, some are protesting. Activists even symbolically locked the doors of Roskomnadzor's offices. But others see Max as a perfectly fine alternative. This fits into Russia's broader push for what they call a sovereign internet, which has already taken down access to Facebook, Instagram, and YouTube. Here's some genuinely good news for the AI supply chain. Taiwan announced today that it's revising its 2026 economic growth forecast up to 7.71%, more than double the earlier estimate of 3.54%. That's a massive jump, and it's almost entirely driven by AI demand. TSMC, the world's largest chip manufacturer, is at the center of this. They make the chips that power Nvidia, Apple, and pretty much every major AI application. Taiwan's exports are expected to surge over 22% this year. Their 2025 numbers were already impressive. The fastest economic expansion in 15 years at 8.68%. Consumer prices are projected to rise just 1.68%, well below the central bank's 2% target, so the fundamentals look solid. The only clouds on the horizon are potential delays in cloud providers' investment plans and, of course, geopolitical risks. And speaking of market fallout, the pain on Wall Street yesterday spilled right into Asia today. The S&P 500 fell 1.57% for its third consecutive decline. The Nasdaq dropped over 2%, and the Dow lost 1.34%, with Cisco leading the way down after issuing disappointing guidance, falling 12%. The theme here is fear that AI tools could replicate or undermine entire business models, and that's hitting trucking, logistics, real estate, and financial stocks. In Asia this morning, Australia's ASX 200 was down 0.71%. Japan's Nikkei futures pointed to a weaker open, and Hong Kong's Hang Seng futures were also below their prior close. Taiwan's market was closed for the Lunar New Year, so they'll catch up to all of this when they reopen. And finally, an interesting perspective from Europe. Capgemini CEO Aiman Ezzat today dismissed calls for total technological sovereignty in Europe. During a post-earnings call, he made the case that no one controls the entire value chain for digital services, not even the United States. He laid out a 4-layer framework: data, operations, regulation, and technology. Europe, he says, has independence in the first 3. But US big tech dominance makes full technological autonomy impossible right now. His argument is practical. Europe should pursue tailored sovereignty solutions depending on the use case, rather than trying to build everything from scratch. Capgemini itself works with AWS, Google Cloud, and Microsoft to offer what they call sovereign AI solutions, using European-based cloud services running on American infrastructure. It's a pragmatic approach, though the company has its own complications. They're selling their US subsidiary after backlash over a contract with Immigration and Customs Enforcement. So the big takeaway today: AI is reshaping everything. Markets, economies, geopolitics, even how countries think about digital independence. Taiwan is riding the wave on the manufacturing side, but Wall Street is learning the hard way that disruption cuts both ways. Russia is using tech restrictions to tighten control, and Europe is trying to find its own path somewhere between sovereignty and pragmatism. We'll keep following all of these stories as they develop. Thank you for staying informed with Digi-all Tech News. We'll be back with more updates as they develop.